Hello, how long should I hold a swing trade? Well, it varies um, for each stocks. For instance, I have some stocks in my portfolio that I purchased in 2024 and they are still in my portfolio. So as long as you need to hold on to it until it becomes positive for you to sell is what I would recommend. I don't like to sell a stock for a loss. Therefore, if I purchase it, I just let it be until it becomes positive. And when it's positive, by default, until all-time new high is reached, from that point, I can decide if I want to sell it or if I want to remain in the trade. And the purpose of our exercise is to see if we can stay in the trade longer, because in the past I would just sell it once it reached a new high. But with the strategy we are using, it is a long-term game. For instance, I have these stocks that I purchased in 2024 is over a year now, and I have not sold it yet. And we purchased it at 335, and we can check to see how much is selling right now. We will go to maximum daily chart. So we are negative in it. Some days ago or last week we are positive in it because we purchased it where the arrow is there, and we were positive in it for this time that the candlestick was above it, but we didn't sell it because since it pulled back close to the trend line, my estimate is maybe that is the value line it like to rest on before start going up. So it did its things and it start going down. We'll just let it be. If it wants to come down to this valley and start going up from there, that will be fine. We might even buy some share again, but for the time being, we purchased it there 2024 and we have not sold it yet. We use short up to non-swing trading strategy in 2024. We purchased, we sold, we purchased, we sold, and we purchased it again, and it was down with that trend and pull back. When up, we became positive temporary here, we let it be. It came back and has been doing those, and we could have sold it when it was around this area, but we just let it be, and it became positive again because right now the price is somewhere here below where we purchased, but we are fine with it. It's going to become positive at some point. So therefore, the goal is to pick good stocks to swing trade so that when the price shows up, you just let it be, become an investment in the portfolio until it becomes positive, and from there you can see how long you want to stay in the trade. And it depends for each stocks. For instance, we are going to pick a stocks we are going to analyze today. FI, those two are highlighted because we purchased them. They are in our portfolio right now, and today is December 10, 2025. We are doing our analysis before the market opens, and I'm not sure why it's doing that. Excuse me. I know that the symbol change for one of them, and that will be probably this one. So the symbol is changing from FI to, I believe, FISV. Could be why I'm not seeing it here. So the price is dropping for it. We are just going to let it be and see what it's doing. So at this point, because it used to be FI, it became FISV. So those are things that can happen to your stocks. They are real companies. They go through different transition in their life. You just want to learn from those experiences and keep improving stocks you are putting in your watch list to swing trade from. That is the key to our strategy. Quality stocks that are going to be around for a while. So this one I will have to see. Yeah, we are just going to keep it in the portfolio, and the symbol is the symbol is going to change to this one. So this does not have our trend lines on it because it's not the symbol that we use for it. So we purchase it, is in our portfolio, and we can even go to our we can go here to see, and we purchase it at the end of 2024 for 221. We sold it a few months later in February for 229 and made $7.63 per share profit, or 106 for the total. And then we purchased it again in September this year for 135, and we have not sold it yet, and it went through that change. So those are things to consider. So the next one we are going to analyze is FICO. We purchased FICO as well. So when we look at FICO, yesterday the price dropped. Yesterday was, so the price dropped. That means the price at the end of the day was lower than the price in the morning when the markets open. It's considered a red bar on our chart and a red price. And is right around the value line that we like to buy at. So we have two value lines here, and again it is a buying time for it. If you like it, you want to buy it, you can grab a share for it. But keep in mind that there is another value line at the bottom that there is a chance it might go to. So when it comes to FICO, we purchased it twice and we have not sold it yet. So we purchased it right at the end of 2024. The price dropped and close to the value line. We like to buy it and start going up from there, and we purchase it again. So we have those two arrows facing upward that show where we purchased. We are positive currently in this second purchase, but not so in this first one. Again, we traded in 2024 along this short uptrend line. Arrow facing up shows where we purchased. Arrow facing down show where we sold. And in 2025, we decided to use long uptrend launching trading strategy by buying it around the valley and sell it after the peak. So for how long will we keep it in our portfolio? Until it becomes positive for both purchases. Right now it's positive on this one, but it's not positive on this one. So by default, we will decide to sell it, or we'll start thinking about selling it after it reaches this all-time new high, after it breaches it. Because we are using maximum chart, it will show all-time highest price, and we use the two extreme, the bottom extreme to buy, the top extreme to sell. So to sell, once we start seeing all-time new high, after it climb all the way up and surpass this peak, we'll start asking ourselves, how long do we want to stay in the trade? So to determine how long we want to stay in the trade, we're trying to see if there is a pattern that happened in the past we can rely on. The last time it left this value line and start going up, for instance, if we assume is around this area, or better yet, around this area, when it pretty much exceed that level, or have a new high start from here, it has been doing that. It did that for over a year. So therefore, we can stay in the trade for the same amount of time or for 3/4 that time frame. And we might say we might want to extend the trade for a year for the time it left this valley line, which is in May 2025. So we might decide to extend the trade until May 2026, for instance, assuming at some point, you know, it's going to reach all-time new high and continue from there. So that's one way to do it. From the last time it left there was October all the way to November or so. And therefore we can say that, well, if it's living here in May, maybe it could be all the way to May next year, and we are just going to keep that in mind. It's not a hard stop, but we are going to keep that in mind. But we'll keep analyzing the chart to see what it's doing, because we don't know if there is a seasonality to it that we need to factor in, or if just the time frame to factor in. Every stock is different, and analyzing the same stocks and trading the same stocks allow us, in my opinion, to get to know those stocks and their price behavior, their pattern behavior, and rely on that to make our decision to buy and to sell. And every stock chart is unique, and getting to know them, I think, is a keeper to our strategy as well, so that we don't start with a new chart every time we want to buy a stocks, but we just trade from our watch list that we create of those good growth stocks that we are willing to trade. Again, your stocks are now, the next one is GD. Investing in the stock market is now insured by the government. Therefore, you will lose your money when you lose your money. So therefore, it's good to pick good stocks that will be around for a while to swing trade and learn from the process. You cannot be on the sideline and try to know everything before you take action, but buy one share at a time and learn the process from there based on your experience as well. That way you know if your strategy is working with a stock, or if your strategy is not working with a particular stocks, and you don't force it, because you cannot change the stocks. You can change your strategy, and it's good if you lack a strategy to find stocks that work well with that strategy and just keep trading those. And the key is to have a good list of master of watch list. You can find stocks to trade from, as you have some stocks in your portfolio you already purchased waiting to sell them. You can still find a good available stocks in your watch list to buy from. So your list should not be too short that you'll run out of stocks in it, and you will trade from it for an entire year or so. So then one more we are going to analyze is GD. So GD, yesterday the price dropped as well, and when we compare where the price is to the two extreme, the valley line and the peak, is closer to the peak, so it's not a buying time just yet. It's going down if you see the direction of the chart, but it's nowhere near where we want to buy. We purchased it this year right at the beginning, and it reached all-time new high somewhere here. We stayed in the trade a little bit and we sold it there. You can see how much we made from that trade, and I believe there is a narrow here, so I'm not sure if we purchase it there and stay in the trade for a while and then purchase it again and sold all of them here. I'm not entirely sure, but we'll see. Otherwise, I sold it but didn't put that arrow there. But again, this is not a buy today. So this concludes how we will analyze those 2 or 3 stocks today. And we can see our FICO here. We purchased it twice and we have not sold them yet. So let's go to GD. Like, When I say we have not sold it, that means this section will remain blank. So let's go to GD. So GD, we purchased it in January. Okay, so that's just one purchase for $267 a share, and we sold it for $321 a share. We purchased in January, we sold it in September. So you can see how long we held on to it compared to FI, the first purchase and sold. So I think their one was like 4 months or so, November to February. So this one from January to September. So, and we made for $54 profit per share, or $1,085 for the total, and that was 20% return. When you hold on to the stocks for a longer period of time, as it continues to go up, you'll have higher profit. You can see the profit rate here. For them, you'll have higher profit. So contrary to last year, when we use short option and swing trading strategy, we bought and sold every few days or every few weeks. If it didn't go up the way we anticipated, we make small profits every few days. On a weekly basis, we traded a lot, but this year we are trading less, and we are staying in the trade longer by using the two extremes as a benchmark to buy at the valley and sell it after the peak is reached. When I say after the peak, once we see the first peak, we can see from the past if it's going to continue making more higher, climbing the mountain higher and higher and higher, and for how long it did in the past, to decide for how long we want to stay in the trade before we get out. So that is the goal, but it takes practice for us to improve on that. And another example we can pick is Google. I think I come across it. So Google, we purchased it at 164 in March, and we sold it in August for 207 and made about $42 profit per share, or $2,000 for all the stocks that we purchased, and we made 25% return on that. And if we go and we put Google, you can see that we bought it there, we sold it there, but you can see that it continued higher up. It's now ready to come down to where we bought it to buy it again. Because we are buying it low, it will take a while for those stocks to come back down to the valley line where we want to buy. Therefore, there is no point getting out too early as soon as we see a new high, if it's going to continue higher, because for us to buy it again, it will take a while. So that is for that reason that we want to practice stay in the trade longer and not getting out too early and not overstaying either. We are not trying to accumulate all the profit that is there to accumulate, but we are trying to accumulate enough profit that we are comfortable with and get out shortly before it starts going down, so that we don't have to wait too long to find it at the valley, because it keeps going up, if that makes sense. Like right now, this one is still going up. It's not ready to start going down yet, and nowhere near to find it where we like to buy it next. So thank you so much for watching our videos. You see, we don't have it all perfect yet, but we keep improving. So you don't need to wait until you know everything before you start buying some share. Just buy one at a time and keep learning from there. It's all about making profit, be able to make profit, even that's just $1 after you pay your brokerage fee. From there, to make more profit, you just need to buy more share. But at the beginning, buy only one share per trade. That way you need to stretch your money to be able to buy other stocks in your portfolio once they are well positioned for you to buy, and practice them and see the ones that are comparable to your strategy and the ones that are not. So that the ones that are not comparable with your strategy, you can take them out of your watch list and replace them with new one and test them as well. And once you are comfortable to scale your profits, you just scale the number of shares you purchase per trade. Thank you so much for watching our videos. Thank you for all of your comments, and thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and NinaSoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. We organize a small group online workshop where you can practice analyzing stock to see if a stock is well positioned for you to to buy. And if you are interested, will you please check our online store liberdownload.com and reserve yourself a seat. The next one is next Saturday. Thank you. And I believe it's Saturday, December 13th. For more of our swing trading strategy, will you please check the playlist in the description of this video, and the link to the workshop will be in the description as well. Thank you for your time.